I'm going to own some silver because I believe that gold is in a primary bull market, and my history tells me that silver will outpace it.
Hmm.
I regard my gold personally as savings. I regard it as something that maintains my purchasing power. I have benefited so extraordinarily as a speculator with silver in the past that I'm going to continue to hold some silver purely for greed purposes. Silver is going to be, by its nature, more volatile than gold, and gold is going to be volatile.
Veteran investor and resource expert Rick Rule has long viewed gold as more than just an investment. It's a store of value, a form of true savings that protects purchasing power through time. For him, gold represents stability amid the chaos of inflation, political uncertainty, and market speculation. But when it comes to silver, his perspective shifts from preservation to opportunity. He sees gold in the midst of a primary bull market, and history, he says, has consistently shown that silver doesn't just follow, but it outpaces. Silver's nature is more volatile, more aggressive, and for investors willing to endure those swings, the rewards can be far greater. While gold remains the safe metal, silver is the speculator's metal, one that tends to surge dramatically once momentum builds. Rule admits that his attachment to silver isn't purely strategic. It's driven partly by greed, or rather by the awareness of its explosive potential during bullish cycles. In times when currencies erode and inflation bites, both metals shine, but silver burns brighter, faster, and with more intensity. For those watching the metals space closely, this could be the moment where silver begins its next great catch-up. Stay informed, like, share, and subscribe for more insights on the metals market and what's coming next.
In the last silver squeeze, and at that point in time, North America was short of silver. And you may recall at Sprott that the Sprott Physical Silver Trust was growing ridiculously. And they cleaned out the silver in Toronto, then they cleaned out the silver in Ottawa, then they cleaned out the silver in Chicago, then they cleaned out the silver in New York, and they had to bring silver from London. Now we have a situation where London's out of silver, and so they got to clean out New York. But the other point you make is that there's a whole bunch of silver that isn't good delivery COMEX or good delivery LBMA silver, but it'll find its way in the system over time.
Right.
And by the way, if the silver price was to fall back from whatever it is today, 50 and change to 40, it wouldn't derail a precious metals bull market. It would change a whole bunch of people that got the religion of silver in the last 4 weeks and make them doubters. But that doesn't matter. I mean, it'll matter to them if they get whipsawed, but it doesn't matter. The fact that silver went from 40 to 50 is only validation of the thesis for those people who needed validation. And were silver to decline from 50 to 40, that wouldn't matter much either, except for the people who were trading that move on margin. My experience has been in prior bull markets that from the point in time when silver begins to outpace gold, that its rate of escalation is at least double that of gold. With regards to gold, and I'm sorry about the elliptical way I answer the question, but with regards to gold, I believe that if the purchasing power of the US dollar declines by 75% over 10 years, which I think it will, that the nominal US dollar price of gold will likely mirror the deterioration of the purchasing power of the US dollar. So a 10-year threefold increase in the gold price wouldn't surprise me at all. If passed as prologue, the silver price escalation could double the gold price escalation. Going back to 3 prior bull markets, that precious metals bull markets are always led by gold. They're led by the fear buyer. My belief is that when the narrative is justified by the price momentum in gold and the generalist investor begins to come into the space, that silver begins to outpace gold substantially. I'm guessing that what we've seen in the last 4 weeks is the beginning of that phenomenon. But I would actually defer to you in terms of that. I note, and Wealthion may know this better than I note that many retail physical silver dealers have run out of retail product in silver. I know that I have, and Sprott has, and likely you have, been able to buy silver in larger denominations, at least in the US and Canada, albeit not in London. So I guess what I'm saying is don't count on the sort of performance that we've seen in the last month continue on with the same velocity. But I absolutely, positively believe that the precious metals bull market is very much intact. What matters in a silver bull market, in my experience, the three that I've lived through in my lifetime, is investment demand. The delta between buyers and sellers in the investment market. It might be a monetary metal in drag, but I note that one of the functions of a monetary metal is that savers believe that they can, if they need to, transact in it, but it is also a store of value. And that's an important aspect of silver, particularly in South Asia, Pakistan, India, Bangladesh, and Sri Lanka, where people have 1,000 years of experience with the debasement of government currency. People, when they can, often choose to store their wealth in precious metals. And for a couple 100 million people in South Asia, the unit cost of gold is too high. They store their wealth in silver. Mm-hmm. And in that sense, it is a monetary metal. And I happen to know from having been there, but also watching the behavior of South Asians in Dubai, that not only is it a store of value, but it is in fact a unit, an informal unit of exchange, which is the definition of a monetary metal. When the silver stocks move, beta can give you 300 or 400% returns. And it's only an extraordinarily greedy person like myself that would prefer to do the work to outperform a 300 or 400% gain.
During the last silver squeeze, the market saw a stunning depletion of physical silver reserves across major vaults. Toronto, Ottawa, Chicago, New York, and even London. The scramble for silver wasn't just about demand, it was about availability. Once London's reserves ran low, the system faced a true supply test. Yet even with this shortage, not all silver is good delivery quality for COMEX or LBMA standards. Though over time, much of it will make its way into circulation. Even a pullback from $50 to $40 per ounce wouldn't signal the end of a precious metals bull market. It would simply shake out short-term traders. Historically, once silver begins to outperform gold, its rate of escalation tends to double gold's. If the US dollar loses 75% of its purchasing power over the next decade, gold could easily triple in price and silver could surge even higher. True to past cycles, precious metals bull markets begin with gold, fueled by fear-based buying, and are later supercharged by silver as broader investors join the trend. Physical shortages, especially across North America, highlight a deeper reality. Silver is reclaiming its role not just as a commodity, but as a monetary metal. Let's get into the interview.
The second thing that makes judging silver pricing as a function of industrial demand difficult is the fact that on the supply side, most silver doesn't come out of silver mines. It comes from recycling, or it comes from a byproduct of other metals. So you have this weird thing with silver that when the silver price goes up, it doesn't necessarily stimulate supply. An increasing copper price or zinc price or lead price might stimulate supply, but an increasing silver price doesn't seem to do that. It might encourage more recycling, but it's a very, very odd metal. I remember back to the point in time when Buffett was believed to have between 15 and 20% of the world's above ground supply of silver. And of course, normal tightment plus Buffett's cachet caused the silver price to escalate fairly dramatically. Mm-hmm. And then it got crushed. And I remember the silver bull saying it was another example of manipulation. What it was in fact that the silver price doubled in US dollar terms. The US dollar doubled against the rupiah, and they either had a flood or a bad harvest or something in India. And the Indian peasantry had a choice between selling their silver or watching their kids starve. They made the correct decision. And a bunch of silver supply that nobody knew existed came on the market. And that event caused me to decide that I was never going to be able to decide what the above ground supplies were. And frankly, that I was never going to be able to time a silver bull market particularly correctly. I had to satisfy myself with the fact that silver moved after gold had established the narrative, and that if I was 2 years early, that the price movement in silver made being early not a problem. Silver pays so much rent when it moves that you can easily afford to be early and you cannot afford to be late. I'm suggesting that people utilize the broker or the facility that they're most comfortable with. If they don't have anybody, we would welcome the business. What Battle Bank does that most institutions, in fact, no institution will do in retail denominations, is we will allow you to access credit secured by your gold, silver, platinum, and palladium. Mercifully, my counterparts in the U.S. banking system consider bullion to be bad collateral, a situation that delights me. But yes, absolutely. Battle Bank will transact in gold and silver, but not to the exclusion of other dealers. The truth is, if you know and love and trust somebody, by all means.
Silver has always been a mysterious metal, not just for its volatility, but for how disconnected it is from traditional supply and demand logic. Unlike copper or zinc, most silver isn't mined directly. It's a byproduct of other metals or comes from recycling. That means when silver prices rise, production doesn't necessarily follow. The metal dances to its own rhythm. History offers some telling examples. When Warren Buffett famously held a massive position in silver, roughly 15% to 20% of the world's above-ground supply, the price skyrocketed, only to crash soon after. But that collapse wasn't manipulation. It was simple economics. In India, facing economic hardship and poor harvests, millions sold their silver to survive, flooding the market with unexpected supply. That moment revealed how unpredictable silver's above-ground reserves truly are. Timing the silver bull market perfectly may be impossible, but being early still pays. When silver runs, it really runs, rewarding patience in ways few assets can. For investors, it's not about catching the exact bottom. It's about recognizing silver's rare potential in an era of shifting currencies and declining trust in fiat systems. A smart investor knows silver pays for being early, but punishes those who are late. Stay informed, like, share, and subscribe for more insights on the metals market and what's coming next.